Yo, hello traders, it's your one and only Forex Q coach, Tim Legend, and I'm super excited having you all here today on this one. Alright, if this is your first time on my channel, could you do me a little favor? Hit the subscribe button, turn the notification bell on so that you don't miss out a single thing. Because right here in this channel, all I do is to post content that help you win in the financial market. So hit the subscribe button and turn the notification bell. Now let's begin. Today we're talking about trend line. Trend line is just the like we have support and resistance. All right, as we have support and resistance being the horizontal line, the use of the horizontal line, we have trend line to be the use of the tool called trend line. And for you to be able to use trend line, you want to slant it this way. Okay, so it's not going to be straight like this, but sideways. That is how you use your trend line. Now, for you to be able to use your trend line to analyze your markets, like I told you guys earlier, for me, when I'm making analysis, I always want to start from the 4-hour time frame. Right from the 4-hour time frame, what I use the 4-hour time frame to do is to observe the trend of the market, because I want to trade along with the trend. Okay, I want to trade along with the trend. But there is one thing that I always do. You know, the boom and crash markets, if you go to the 1-minute time frame, you'll be able to see how the boom and crash markets actually moves. Now, for the boom markets, it spikes, goes to the upside. Why? The candlesticks goes to the downside. All right. And there's one thing that I don't do. I don't trade the candlesticks because I don't have the time for it. I always love, if I enter the market, I wouldn't have to wait up to 30 minutes, and I'll grab what I want to grab out of the market and exit for the day. So because of that, I usually don't have time trading these candlesticks. So I always love to trade just the spikes. And if you observe my YouTube channel, you'll notice that all the videos and strategies concerning boom and crash that I always post are usually videos that relates to catching spikes. Okay, that's just because that's my style of trading. So everything I'm going to teach you guys during this training is nothing else but how to catch the spikes. Then you can decide to when you begin your trading journey, you can decide to look forward to trading the candlesticks. So one thing I always do once I get into the markets, I want to first of all observe. If I get into the boom markets, I want to first of all observe, is the boom market trending to the direction that I want to trade? Because for the bull market, I only want to trade uptrends. So if I look at the bull market right now and get to observe, what I can see clearly in the bull market right now is that this market is a downtrending market. It's a downtrending market in the sense that it is the candlesticks that are going down. But what I want to catch is spikes. So what I'll do is I will leave this market and look for another market. All right, that's just my trading style. Everybody has got their own trading style. Okay, so that's for me what I usually do. But for the course of this training, I might likely not have to be looking around for all the markets. So I will just use it to run the training that I want to go do with you guys. So when you want to make analysis, first thing you want to do is to go to your higher time frame. Your higher time frame in the sense 4-hour or daily time frame. So for me, I usually use the 4-hour time frame, because clearly from the 4-hour time frame, I can see that this is a clear down trend. I don't need somebody to tell me. Even a child will tell you that the market is bearish. All right. So now that I've observed that this is a downtrending market, next thing that I want to do is to head to my 1-hour time frame. Now, from the 1-hour time frame, what I want to do is to spot out my various supports and resistance zones. Okay, various supports and resistance zones. So right now, let me plot out my supports. Resistance here. I have on the highest high here. Let me see if I can spot out any other side. Okay, you can just decide to put here. Now, there's one mistake a lot of traders do when they get into their chart and they want to plot out supports and resistance. They would want to put lines everywhere. They want to put this horizontal line everywhere because they can see support and resistance everywhere. You understand? So they want to put it everywhere, but that is not the right way to trade, because by the time you put lines everywhere, your chart is going to be soiled up, and even you yourself will be so confused, like you don't even know where to trade from again. So to prevent such kind of confusion, it is best you go along with just few trend lines, okay? Just few lines, so that you can have a cleaner chart. Already with this few lines I have just put here, it's easier for me to spot out the fact that if price can come out like this, all right, I will look for a buying opportunity all the way to the zone. Or if price decides that it wants to come back down since it's at resistance currently, then I know I should sell all the way down to here, and that's quite a lot for me. All right, it's easier and better that way than putting lines everywhere and you just kind of like, where do I sell from, where do I buy from? Okay, so take note of that. All right, so now once you've brought out your supports and your resistances, okay, the next thing you want to check out is your trend line. Now, how do you plot a trend line? First of all, what is the use of a trend line? You use a trend line to know the areas where price might likely get to and give you a turn. All right. Now, for instance, in a bullish market, when you have price going bullish, all right, that's high, higher low, higher high, higher low, higher high, higher low, higher high. All right. Now, here you want to bring out your trend line. Your trend line, you always want to make sure your trend line has at least 2 touches. So from here, this is the second touch, you drag it all the way up. Okay, the first touch, the second touch, and you notice that the third low hasn't touched the trend line yet. So it simply means you're still watching and waiting. Any day price gets to this line, you want to look for an opportunity to buy, having in mind that this is what price might likely do, get to this trend line again. Since it respected this first time and the second time, there's every tendency that on the third time, it will respect again. So as a trader, what you want to do is to look for your buying opportunity during this era. That is for a bullish trend. For a bearish trend, when price is going lower low, creating lower lows, lower highs, okay, you want to bring out your trend line. For you to bring out your trend line, you have to bring it from the top, not from beneath this time. Notice, because it's a downtrend, so from the top, you drag it all the way down. Okay, so let's say, for instance, maybe this one hadn't touched yet. So this was the first touch, this was the second touch. You're waiting for your third touch. Okay, for your trend line to be valid, you must make sure it has 2 touches. All right, 2 touches. From the third touch, you want to look for your entries. The fourth touch might likely work, but sometimes the fourth touch usually might likely break through that trend line and go opposite direction. Okay, so usually when we trade the trend line strategy, we always like to trade only from the third touch, because one thing is this: the more price touches your trend line, the more that trend line starts getting weaker. But a lot of traders don't understand that logic. A lot of traders believe in, if it has touched it 10 times, then it means that's a strong zone. No, you need to understand that the more price touches your trend line, the more that trend line gets weaker. This is how I always explain it to my students. When you have, I believe a lot of you must have watched war movies, huh? All those war movie where you have, okay, so this is the city gate. All right, so if this is the city gate here, now the warriors who are coming to fight people, their opponents, so this is their opponent right inside the city, okay, and these are warriors standing and waiting to see what will happen, but they are behind the gate, holding the gate. They don't want the gate to what? Fall, because they know once it falls, the war has begun. Now, their opponents behind would stand here with a heavy log. So their opponent is going to stand here with a very heavy wood to hit the gate and break it down. All right, so this is going to be the wood. They hold it together. And what? They move first, they push, boom. They move back, they push, boom. Second, they move back, they push. The third time, they keep pushing. All right. Now, you know for sure that the more they are hitting this gate, the more this gate is getting weaker. And before you know it, the gate will fall. That is the same logic behind supports and resistance and trend lines. The more price hits your trend line, the more that trend line is getting weaker. The more it hits it, the more it gets weaker. So don't be like other traders who say, oh, it has touched it 5 times, meaning here is very strong. It's not strong, rather it's getting weaker.
Please hit the subscribe button and turn on the notification bell.